Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Saturday, January 22nd, 3:05 p.m. New York time. We'll look at a recap of the past week. Start with the equity indexes. Each candle's a week. Remember, past Monday was a holiday, so it's not representing a full week of trading. But still, massive sell-off. S&P 500 cash index, red for the week, lower high, lower low. Still on target, trending down into this demand zone where buyers stepped in the past. We'll see if history repeats itself. And just shy of going into here, touching it. So maybe we'll have a little retracement next week. I already labeled the midpoint. If you're looking to trade bearish, that's an opportunity if it gets up there to enter on that time frame. Nasdaq 100. It's already inside a demand zone where buyers is enclosed inside it. That's even more bearish. Yep, the Nasdaq's even more bearish than the S&P 500. Red, lower low, lower high. Dow Jones Industrial Average, lower high, lower low. It's touching the demand zone where buyers stepped in. And you can see which individual stocks in there are performing better. I made that video yesterday. 30 stocks in the Dow. Russell 2000, wow. Broke below and closed below this demand zone. Huge accumulation. Let's zoom out. It's been accumulation, not accumulation. It's been acceleration for most of the year, past year of last year. And now it went inside this demand zone where this impulse move was up and it closed inside it. That's bearish. And if we have a retracement, opportunity to look in there to trade short. It might continue going down and take out this swing low too. It's worse. It's much worse than the other indexes. And the Dow transports lower low, lower high, closing below the swing low. That's bearish. And the Dow utilities also lower high, lower low. But didn't close below nor take out the swing low. That's good. If you like stocks that have dividends, well, this index has a lot of stocks with dividends, high dividends. They're not considered growth, they're just considered income, where your technology Nasdaq is the growth. What do you think they all have in common from the past week? They all closed red. They all made lower highs. Trend is down. Let's look at the sectors in the S&P 500. Remember, there's 11 sectors in the S&P 500. We'll start off with the largest sector and work way down to the smallest. First, XLK. Look at that. Lower high, lower low. Broke below and closed below this consolidation. Bearish. XLV, same thing. Lower low, lower high. Just shy of taking out the swing low and testing it. It hasn't tested it yet. Yeah. XLF. Huge sell-off for the financials. And just shy of going in and closing inside this demand zone where buyers stepped in. XLY, red, lower high, lower low, took out the swing lows and closed below it, really bearish. So right now we're all red. XLC, yep, higher, lower low, took out this demand zone inside here, just shy of going deep inside it, closing it. So see what happens. XLI as well, lower high, lower low, just shy of going in there. Look at that double top there. Consolidation, breakdown, consolidation, breakdown. Notice these two candles, small bodies, long tails on both sides. Distribution, like almost like spinning tops, but the tails are too long. Sign of distribution. That means smart money, institutional money was selling. XLP, red, lower, 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 high. It's in a huge consolidation. So XLP is trending lower, lower, low, lower, high. But again, it's in that consolidation, still in that staircase pattern, higher, high. That's good. If you're in that position, maybe that's going to be the next leader coming in the following week. XLE, all-time new high, and then closed red back inside that prior week. Also notice the past, it took out this swing high. This, well, let's zoom out so you can see. All-time high for this year, but going all the way back here, it finally, it's like from 3 years ago, 2019, they finally tested the highs here, which was a supply zone of sellers, and rejected it as expected because there were sellers up here before, rejected, closed below. So now we're going to wonder if it does a retracement on weakness, opportunity to reload if you're bullish, and see if it goes higher for that swing high, 68.81. XLU, lower low, lower high, tested the swing low and rejected and closed above it. Still, this is suspicious. So you might have a minor retracement before it rolls over, goes lower. XLRE, real estate, lower high, lower low, closing inside the demands over buyers are. Well, if it breaks through there, that's not good. Breaks below that, closes below that. XLB, huge move down, just shy of closing below the swing low and taking it out. Interesting. And look, see, prior week, small body, high till, low till, and it broke below there, just like I mentioned, the other one may be occurring here on XLU. So we'll see if that XLU is going to follow through come next week and do what happened here with XLB. So those are the 11 sectors. Again, just looking bad, bearish, trending down. Even though we might hit an all-time high on one and reject it and sold off. Let's look at the Fang plus stocks. Start off with Apple. Again, each candle's a week. Closed red, lower high, lower low, closed below this consolidation. That's bearish. Microsoft, lower low, lower high, closed red. Again, been bearish all the way since last year. Been trading bearish, trading short, making monthly income, sometimes weekly income. Yep, it's working and coming into this demand zone. Amazon, huge sell-off. Went right into the swing low and closed below it. Let's remove that swing low. That's really bearish. Let's go open longer duration. Yeah. It took out all the swing lows here. That's bad. Nope, that's bad. Yep. Here's a consolidation. So potential. Yeah, it may do a retracement, minor retracement, and grind slowly, but potential going down here where a lot of buyers were before, this accumulation area. And Facebook, red for the week. Lower high, lower low, closing inside this demand zone. That's bearish. Google, also lower high, lower low, closing red. Took out that swing low and closed below it. That's bearish. Tesla, not surprised. Lower low, lower high, trending down. NVIDIA, if I pronounce right, NVDA, took out that swing low, closed below it. That's bearish. And the whole year, look at that. All the gains it had for the first week, it already took them all out. Most of them are already trading below their highs. So almost all the gains made this year, if you bought the opening of the year, are gone. Netflix, red, lower high, lower low, huge trading range, incredible. Take out all these yellow horizontal lines, swing lows in one huge move. Amazing. Was there anybody left to sell, or did everybody close their positions at least by yesterday, Friday? You're still in it. Why? Let's go zoom out more. Oof. So all of this year's gains are gone, or if last year's gains are gone, and from 2020, maybe half the gains are already gone. Amazing. Alibaba, Bravo Alpha, red for the week, lower low, lower high. I mentioned past weeks, it's under accumulation. Looks like buyers are stepping in here. And then if you bought that period, it went higher. Yeah, so now we're in a retracement. Lower high, lower low, closed inside here. So again, another opportunity to look to reload on a faster time frame if you see a trigger. If you don't know what a trigger is, draw my Patreon, explain what that is. So this is, again, above the 3 weeks. First week of the new year, second week, third week. We still haven't taken out the low of this year yet. So this is more, let me put yellows on. So this is performing better than the equity indexes and many of the sector stocks I showed you, if not all of them. Amazing. So a Chinese company is outperforming the United States market. And another leadership I mentioned. Well, let's go, we'll zoom this out more so you can see some more. Yep. So yeah, we're way below the highs of last year and the prior year. Again, it's under accumulation. Is that going to hold up? No, no, no. Don't know. Money management, you're wrong, get out of it. But I'd rather be buying this on this potential trigger on a faster time frame than many of the other ones I just mentioned. Why, you want to buy Netflix? You want to be a hero? Okay, go ahead and step in front and catch that falling knife. And the other one I shared with you, another Chinese stock. Maybe the Chinese are making a comeback. FXI. I mentioned this last year and this year to consider buying it. So look what we did. We closed green for the week, higher high, higher low, trending up. Here, if you bought it the prior week, you'd be still green, making money, being better off than the other ones. Yep. Don't marry your position. There's better trades out there than trying to catch a falling knife. Let's look at some of the other ones I mentioned. AT&T. Oops. There we go. There we go. AT&T. It's going to close red for the week, but made a higher high, higher low. And for the year, we're way above the lows. So it's outperforming than many of the other ones. We got a lot of earnings coming soon. A lot of earnings. So you're much more aware than many other people. I'll leave it like this. I think it was like 3 days ago on CNBC in the morning, New York time. CNBC early in the morning, and they had a guest on, a financial institution, person that managed other people's money. He was talking positive about Microsoft. He was talking about it's good buy, it's good hold. And then the stock went lower that day. This is weekly. Again, he was pumping it up because maybe he's invested in this for his clients and he's trying to hold prices up because maybe he can't sell them as fast or doesn't want to unload them all at one time. And pump and dump supported by CNBC, Fox Business, and many other media broadcast companies. Garbage, shame on them.